Stocks that pay dividends can provide a great opportunity to increase the income diversification of an investment portfolio. The best bit is that finding and buying dividend stocks is a long way from being rocket science. Not only does it work, but it's easy to do. Today I want to show you the best dividend stocks to target in 2023, most especially in the UK. And if that sounds interesting to you, please subscribe to my channel and hit the bell to never miss my updates. Number 1. M&G. This London-based funding management company uses its money pile to invest in equities, property and bonds. For more than 80 years, it's been making clever decisions and relatively safe belongings and throwing off cash returns to its shareholders. The company only listed on the London Stock Exchange, LSE, in 2019 when it was once spun out of insurance group Prudential. But it has already been marked as one of the highest dividend-paying shares in the UK. It's one of only 4 FTSE 100 companies, which in 2019, paid a dividend yield larger than 10%. Number 2. Everis. Everis is a metal making and mining company. It's listed on the LSE, but a majority of the shares are still owned by Russian billionaire Roman Abramovich, who additionally owns Chelsea Football Club. Its status as one of the best UK dividend shares suggests Mr. Abramovich is more than happy with the situation, and that makes the dividends possibly to keep on coming. 2019, reported dividend amount per share, 10.53%. 2020, reported dividend amount per share, 9.21%, estimate. Source, IG. Everis recorded a dividend yield in 2019 in extra of 10%, but also offers some components of a growth stock. Between March and November 2020, the Everis share price doubled in value as hopes of financial recovery spread through the markets. Number 3. Imperial Brands. Imperial Brands, formerly known as Imperial Tobacco, is a UK-based FTSE 100 tobacco and cigarette manufacturer. It has a lengthy track record of returning cash to buyers and is considered one of the best dividend stocks in the FTSE 100. Expanding market share in tobacco merchandise is nowadays politically sensitive. Without the need to invest in new projects, instead, the company focuses on operational efficiency and profits are paid to shareholders. 2019, reported dividend amount per share, 10.55%. 2020, reported dividend quantity per share, 10.53%, estimate. Number 4. Aviva. Insurance giant Aviva has more than 33 million customers international and, for a long time, has been one of the top UK dividend stocks. A recent administration shakeup might see the firm divert some of its spare cash into funding projects rather than shareholders, but that ought to also pay off in the long run. It will be worth listening out for comments made by means of new CEO Amanda Blanc, as these might give a clue as to whether the plus 10% yield is threatened in the near term. It should be a case of dividend hunters needing to hold on to the stock for a longer time period, earlier than getting a full return on those new projects. 2019, reported dividend amount per share, 10.37%. 2020, reported dividend amount per share, 10.84%, estimate. Number 5. Rio Tinto. Rio Tinto is one of the world's greatest mining companies. Its reputation as a high-yield stock would possibly not be quite as high as some of the other stocks on this list, but its inclusion is because it additionally offers a little bit more spice. The price of mining shares can move dramatically as the outlook for the global economy shifts. A monetary boom would be great news for the Rio Tinto share price. However, if that doesn't come about, the plus 5% dividend yield still beats what you can get on a savings account. How to buy dividend stocks online. It takes minutes to set up an account with an online broker and start buying high dividend stocks. It can be time well spent, allowing you to then sit back and enjoy long-term gains. Modern brokers allow you to follow your positions on desktop platforms or on mobile trading apps. There are also free demo accounts on offer so you can practice the mechanics of trading, experiment with virtual cash and learn how to access research and analysis tools. There are 2 factors that are particularly important for dividend investors. How long you want to hold your position will determine whether you buy the stock outright or in CFD form. This research note on CFD versus share dealing explores that subject, but if your investment timeline is months and years rather than days or weeks, you are probably better off buying shares outright. In the end, you cannot guarantee a company is going to pay a dividend, or earn enough to match or exceed their last dividend payments. However, you can make a decision based on a number of valuable metrics such as the variables covered, to make the most informed decision possible. That will be all for today. Please subscribe for more videos like this. Thanks for watching.